We're joined by Ian Parker, who is a fellow director of mine at Whitley, Stimpson, and Scott Roberts, who is managing director at Polar Technology Group, who are based in Ensham and work in production of materials for medical, vehicle technology, energy, aerospace and defence. Scott uses the R&D tax credits within his business, and Ian and I help our clients in claiming it. It's very generous tax relief. It's a tax relief where the government believe they're actually not giving as much money away as they've targeted to give away. So there's certainly scope to make claims out there. And whilst it is very much relevant for very high-tech businesses like Scott's, it's also relevant to what I would call old metal bashing businesses. So I've seen it claimed in a very much more traditional manufacturing sector where the qualification is that you're applying an existing technology in a new or novel way to increase efficiencies. So it's worth thinking about, even if eventually you conclude your business doesn't qualify, it's at least worth going through the thought process because it's such a generous relief. So at that point, I will hand over to Ian to take us through some of the basics on it.
Thanks, Owen. So as Owen's alluded to, this morning we're going to talk about R&D tax credits and actually how beneficial they could be to your business and why now might be the best time to consider claiming them. So I thought with that in mind, it was best just to start and cover the basics. The majority of our clients are small and medium-sized owner-managed businesses. And as a result of that, they fall within the R&D SME scheme. This regime and scheme is very straightforward, and basically it means that for every £1 that a business spends on qualifying research and development expenditure, which is actually probably more far-reaching than you might realise, and I know Scott and I are going to discuss the various sort of areas that it can cover in a little bit more detail later on. But HMRC will increase that pound you spent by 130%, meaning that you would actually get a £2.30 deduction from your corporation taxable profits. So putting that into context, if you're a corporation tax paying business, this means that it would reduce your tax liability and give you an immediate sort of tax saving at 19%. So just running through some very basic numbers, if you were to spend £1 million on qualifying R&D under the SME scheme, you would get a deduction from your profits of 2.3 million. And at 19%, that's a tax saving of £437,000. So that's an incredibly good if you like, rate of return on the £1 million investment that actually a lot of businesses would have spent anyway, regardless of this scheme being there. One of the things that I often get asked and hear when talking about R&D is, well, that's fine, but actually I'm sort of a startup or I'm just doing the R&D at the moment and not generating huge amounts of revenue, so I'm loss making. Can I still claim this? And the short answer is that yes, you can. There's nothing at all to stop a loss making business claiming the R&D credits. But what the revenues say is that because you're not going to get the tax saving at 19%, if you generate a loss because of R&D or alongside R&D, you can actually surrender that loss for a repayable credit at 14.5%. So you can actually use this scheme in your early years when cash flow might be tight to generate a real hard cash refund. And just going back to my numbers earlier on, if you spent £1 million on qualifying R&D, but you were loss making, that would still generate you a refund of just over £330,000, which, as I say, the the timing of that, they pay it quite quickly after the tax return is filed. It can be invaluable to small businesses managing their cash flow. The other scheme that runs alongside the SME scheme applies if you are a large company or if you are an SME but you're claiming R&D expenditure which has been partially funded by government grants. And this other scheme is called the R&D Expenditure Credit and is often referred to as the RDEC scheme. The scheme, you will see RDEC, and you'll quite commonly also see it described as the above the line scheme for reasons that I will now try and explain. So the way that this one works is that you get a tax credit at a rate of 13% for every pound that you spend on qualifying R&D. But the catch with this one, because it applies to larger companies typically, is that this tax credit is actually treated as taxable income. So you get the credit, but you then pay tax on that as a receipt. So the scheme isn't as generous as the SME scheme above, but just again, running through the same numbers, if you were to spend £1 million on R&D under the RDEC scheme, the anticipated tax saving once you've paid the tax on the credit you're getting would be £105,000 basically. So it's working out an effective saving rate of just over 10%, which, as you can see, is lower than the 2% above, but still not to be sniffed at. I think in terms of just the paperwork side of things, both of these schemes are claimed through your usual corporation tax return. And we assist clients in making the claims. We try and make it as smooth and straightforward as possible. Usually what happens is that you complete the boxes on the tax return, and then you also send in an accompanying R&D report just explaining the projects that you've undertaken or the developments that you've made. And this is something that we can help you prepare and work with either your tech guys or your finance guys just to make sure that the points are covered. And then if you are due a refund, once the corporation tax return has been submitted, HMRC aim to turn these around and process them and get the refund paid out to you within 4 weeks. So again, it's a relatively quick process once the return has gone in that can really help with cash flow when you need it most. And I think I'm fair in saying, Owen, that historically this has actually always been one of the better government departments to deal with as well.
Yes, certainly historically they were very well trained in terms of HMRC, and they've been very helpful. I think the department is suffering a little bit more, as all government departments are, with funding struggles at the moment. So they may be not as good as they were a couple of years ago, but they are kind of charged with trying to help people claim this. And I've certainly had instances where they've come out to examine a claim with us, and they said, well, we don't think you can claim for X, but on the other hand, you don't seem to have claimed for Y, which you can. So they're not as confrontational as maybe some departments of HMRC, and they do tend to try and help if they can at all.
No, fantastic. So that's really sort of an overview, a very brief overview of the two schemes and how they're operated. I think today what we were looking to try and do was show you the practicalities and the practical applications of these schemes. So I will park the techie talk for now. And I've actually got a few questions just to run through with Scott. And I think I'll start off by saying, when people think about R&D, they quite often think of men in white coats in laboratories. We've worked with you on substantial claims for a number of years. Could you perhaps give us an overview of your group, what you do? And I think some people might be surprised to hear that you qualify in the way that you do.
Yeah, sure. Thanks, Ian. So we're based in Ensham. We're an engineering group of companies. We're about 20 million turnover, employ about 200 people, so that kind of size. And the group is split into 3 subsidiaries. There's a property side, but there's also the 2 engineering sides. So there's SST Technology, which concentrates on metals technology, and Lentus Composites, which is mainly polymer composites through short fiber or continuous fiber reinforced plastics. And as an engineering-led manufacturing company, we make a range of products for across 4 different market sectors. So you've got performance automotive, everything from Formula One down to sort of road going, but quite high end road going sort of supercars. Aerospace and defense, the energy sector, particularly in terms of green energy and energy recovery, and then we do have a medical and we do some scientific stuff, mainly with the Atomic Energy Authority. And across those 4 areas, we've kind of got 4 themes. You know, we try to make things lighter weight for people and reduce the energy to move stuff around. We transmit mechanical power, mainly through torque, a range of different torque and transmission shafts. We have a range of products and technologies that help people move fluid around and manage their heat transfer. So an example of that would be with the work we do with our customers in the MRI scanner world. And finally, as the world becomes sort of more electric, we have a range of technologies and products that help people make their electric motors more efficient. And I think just leading into why this scheme is so beneficial to us, you know, our product strategy over the last few years has really been on 3 elements. One is automation. So whenever we embark on a project, we want to try to make it more automated, to take costs out, and to enable us to scale up units through automation techniques. Scalability, we're happy to be involved in projects and sort of one-off designs, but only really if it's going to lead to a manufactured product. So again, we don't really embark on science projects, but we're happy to do some upfront technical studies, but it needs to be scalable into sensible numbers. And then in terms of our overall technology, we try to patent our products and, more importantly, our processes to sort of give us a market edge and to try to keep our competition out. So there's a range of IP protection that goes with that. That then kind of leads in quite nicely to how the R&D tax credit scheme can help support us.
Yeah, and you sort of touched upon it there, that it's as much about processes as it is about actual developments in tangible products. It's about the process of making those rather than the finished piece. Have you been surprised at actually the scope and how much has qualified for R&D over the years?
Yeah, quite surprised actually. It's been a very welcome surprise. You said it before. My perception of R&D tax credits is something that would only be applied for if you had a business with people, as you said, walking around in white coats in some kind of laboratory setting. But nothing could be further from the truth. And I think the HMRC's own, if you go on their website, the words that came across to me is that any process or any activity that removes ambiguity from a process is eligible. So to give you a couple of examples, we've developed a technique called, it's based on hydroforming, and we've developed a very quick way of doing this. And I would never have thought that would have been research, but taking an existing process, modifying it to suit our needs, and then using that to develop a suite of products for customers in Formula One, for example, we've been able to claim back on that. You've worked your magic, and then that cash has then come back into the business to go for the next project. So that's one example. Additive layer manufacturing technology is another area where traditional engineering businesses using subtractive technologies like machining, where you take a block of material and you remove material, now a lot of these companies, ours included, are actually making parts with a powder bed and laser sintering and building up a material. And again, so every time we're using that or developing that process to make a new product for one of our customers in automotive or aerospace and defense, for example, we've been able to gather up all the costs of those materials, and we keep a record of all the people that are working on the job. You give me a form to fill in, and we've already got the information. It's just putting it on the form, and over to you.
Yeah, absolutely. And from our perspective, we try and make it as efficient as possible by not making the R&D in effect a separate exercise. It runs alongside the audit. And so we're in a position, once the accounts have been finished, that we can get these returns banged in as well, because far too often we see that the accounts get done and then you've got another sort of 1 month, 2 months delay before the tax gets finished off and the R&D and filed. And as we touched upon earlier, if you can file your return earlier, the incentive is there because the cash comes back. With the exception of last year, where HMRC, I think, were having a bad period of time. And I think it did take about 10 weeks, didn't it, in the end? But ordinarily 4 weeks and the cash is back with you. So you started to say about it there that it's quite a straightforward form. You're filling in sort of staff who have been involved, hours worked. You're looking at the costs that can be attributed to that. Some people that I talk to who are very much involved, probably less numbers people, they're more involved in the process. They think it's going to be very time consuming and onerous. Do you tend to find that actually they have most of the information, or are they recording unique data just for this separately?
Look, so it's a good question. And again, it was something that I was quite concerned of. We're all busy, got an engineering company to run, we're on the shop floor, and any kind of HMRC or government-based initiative, which is then being sponsored by a team of professionals, you kind of think, oh, it'll never be as good as you think it is, and you sort of shy away from it. All I would say to anybody watching this is nothing could be further from the truth. You're collecting the data. You know what bills you're paying. You've got the receipt, so there's no additional work there. You know what you pay your guys in the business, whether they're on the engineering side, maybe doing some computer or CAD work, doing some drawings, whether they're on the shop floor. You don't have to have an R&D department. Remember, it's any process, it's any cost within your business which is eligible towards going to removing ambiguity from a process. So every time you set up something new for a customer, effectively that's eligible because you're creating value for the net benefit of the UK. All you've got to do, quite frankly, is take the information that your management system will be recording anyway. And whether that's you have recorded it in a little ledger book or you've got a SAP system, it doesn't matter. Ian, you're the guy that comes and your team, you'll ask me the questions and I hand that over to our internal accountant or to the guy running the project and they just give you the answers. We have to have the answers anyway because I got to pay people, so I know what that cost is. And if I'm buying something on the project, I got to pay for that, so I know what that cost is. So apart from making a judgment under your guidance about apportioning people's time to a specific project and maybe just putting together a short paragraph for the file which just says what we've done, which for example you've got to do anyway, especially if you're working on a Innovate UK or a program which is being funded by the government. That's even better. Even that's eligible. It really is. I don't like the phrase, but it really is a no-brainer, and it's very, very easy to do.
Yeah, no, absolutely. And I'm going to put you on the spot now a little bit, and I don't want to go down the deep and dark road that is politics, but in light of everything that's happened over the last few months, the COVID-19 pandemic, I don't think we can get through a webinar these days without mentioning it. Obviously, we touched upon you're predominantly eligible for the SME relief, so you're getting 130% uplift and this has been in place since April 15 on your qualifying R&D. Now, obviously, you wouldn't want to see that removed. It's a fantastic relief, but do you think it should be increased to sort of try and drive growth? Are there things that you have done or would do because you know this relief is in the background and you're going to get the benefit of it, that perhaps without it you wouldn't?
We would definitely do as much, if not more, if this relief was increased. And the reason is it removes so much risk from me making a judgment of should we go into this market, should we develop a new technology? Because if I know that I can not only claim, most smallish size engineering businesses, most companies, quite frankly, really run themselves on cash. Yes, profit is an important part of P&L, but it nonetheless is a matter of opinion. But when push comes to shove, it's preserving cash within the business, and especially in today's climate, it's a must-have in your portfolio if you're running a business. It brings cash in. It's quick. It's cheap to administer. It reduces a huge amount of risk from you making those decisions, and it gives you the opportunity to. We can go to customers and say, I tell you what, I don't know, let's just say that you've got an automotive, a defense, a medical customer, you've got an idea. You can go to a customer and say, how about we try this idea? We think it will give you some benefits. Now, normally you would say to that customer, oh, you've got to pay for it up front. And they'll say, well, there's not really a problem with it. We don't want to take that risk. Or you could then apply for a government grant, and then unless there's anything specifically novel within the framework of that grant, you may not get it, and that will be a week's worth of your time applying for the grant. But here, you can you can apply for the grant anyway, and then get the money back, but you can say, look, actually, I think this is going to work. You can do it, and then you know, within the framework of eligibility, and most things are eligible, you're going to get the money back plus an uplift. So it really does de-risk you in a world where what we heard this morning that capital gains tax could be going up. So at the moment, who's going to pay for all of this COVID stuff? So companies are going to come under increasing tax pressure. This is a mechanism whereby doing the right thing for your own business and for the net benefit of the UK, you're getting tax back. You're getting real tangible cash back into your business, which you can then spend. There's no strings attached. You can then spend that on what you see fit.
Yeah, and I think that's the key, isn't it? Once the cash comes back, that is yours to do what you like with. And I know in the past that Owen has looked at sort of what things that can be done almost retrospectively the following year with regards to amending a return and actually using that cash and making it work as well as it can for the business as part of an annual tax planning exercise. So as you say, I mean, that's fantastic. That's the one difference, I think, between this and the grant income, where the grant income does have to be used for the specific purposes.
Ian, just to jump back, I know you mentioned that we try and wrap up the R&D exercise in the course of carrying out the audit and finalising the accounts. But if for any reason that hasn't been done, that doesn't preclude you from looking back and making a claim retrospectively, does it?
No, absolutely not. So we can look at, we can potentially look back 2 years very easily and get the claims prepared. As Scott has said, most of the information that we need you will have on your files somewhere. So it's not a case that you've missed the boat. You can we can run through the forms, get a report prepared and get things submitted and get the cash back for you or the tax saving.
I think very often the trickiest bit, actually, if I can posit it, is explaining, if you're from a technological or scientific background or engineering background, explaining to a number cruncher like me,
like us, yeah,
how something is innovative and how something is pushing a process in an area which it otherwise wouldn't have gone. And historically, although that's the trickiest bit, I know when Scott and I, in the olden days, 10 or 12 years ago, used to put R&D claims together. For me, as an accountant, that was one of the most fascinating bits of the job. And I think a challenging one for Scott, trying to get me to take on board engineering and scientific concepts.
Now, if I could just add to that, look, I think it's worth saying again, I just want to get this over to try to help as many people who are running engineering companies, maybe machine shops, like ours, that it really isn't about pushing the frontiers of science. I'll give you an example. If, for example, you have an existing customer and they're putting you under pressure for cost down, and you need to increase the feed rate on a machining operation, and you want to try different cutters and you want to try different feed rates, but you still got to preserve a certain quality or surface finish, then that process is eligible, because what you're doing, you may spend a week trying different things, buying some new tools to optimize that process to take your cost down, so you can offer them a price reduction to hang on to that business, which, let's face it, again, is for the net benefit of the UK, so it doesn't run off to China or somewhere else around the world that's cheaper. Capture that. Keep the receipts for the tools that you've bought. Maybe you've got an offline machine that you've just brought in to do some offline processing. Keep all of those costs, because then when Ian and the team says, okay, so what do you think you might have eligible? You can say, oh yeah, so, a year ago or 6 months ago, we did this little project which enabled us to hang on to this revenue from a customer. And guess what? You get the money back plus an uplift. So, there's so much that's there. It doesn't have to be a science project. Things that people will be doing in their engineering companies that they think is part of everyday running the business are probably likely to be eligible.
Fantastic. Yeah, thanks, Scott. That's really, really, really insightful. It's been really good to talk through the R&D scheme with you today. I think that looks like it's our half an hour almost up. Is there anything you wanted to add, Owen?
No, just to say thank you to Scott, because I know they're always busy down there in Ensham. So thanks very much for sparing us the time to come along and give you your take on it.
Absolute pleasure.
Brilliant.
Thanks very much.
Reiterate that. Thank you, Scott. And if anyone has any or wants to explore this further, please do get in touch with Owen and myself. Our details are readily available on the Whitley Stimpson website.